G'day, Mel James here. Welcome to the opening market. First week of serious amounts of auctions. We covered 33 today. We bought a few, by the way, didn't miss any. What does that actually mean? Let's find out. Demand, bid demand, where do we think things are at? At 1.6, I would have to say that I think bid demand was slightly on the cooler side than what I actually thought it was going to be. Supply, stock levels, where are they at the moment? I basically think that they're not great. I think we thought we were going to get more. So not too high stock levels, not too high demand. Where does that leave price? Well, the clearance rates, they're not absolutely final yet, but I think you're going to find they're in the 60s, not the 70s. What does that actually mean? Price, well, let's just say price is neutral. That's where I think things are at. Let's delve a little bit more into the auctions, and what are we going to find? Ducks and loans. In other words, no bidders or one bidder. 50% of the auctions today weren't really auctions. Well, because you need two people for an auction, 50% didn't have two people. What did that actually mean? Well, under the hammer, meaning on the street, 2 in 3 properties were not sold like that. They didn't happen. Only 1 in 3 properties, 30% approximately, were sold under the hammer. Volcanoes, the big ones, the big power ones are ones that drive the market. The ones we perhaps like to see but not actually get involved in unless you're selling. There are almost none today. There were 3 of them out of the 32, 33 auctions that we covered. So in other words, 1 in 10. That is not the sign of a booming market. So what will happen from here? Well, next week, perhaps a little bit better stock, perhaps there'll be a little bit more oomph. But I think the general opinion today in the opening market first week is not quite as strong as I was thinking it was a week or 2 weeks ago. I'm Mel James. See you next week.